Hi there. So today I'm going to be talking you through Apple's valuation using DCF and multiples valuation model. And I will also walk you through the technical analysis for Apple and some fundamental analysis for my thoughts in terms of Apple's price. Hi, my name is Venus. If you're new here, welcome. And I have been a stock investor for the past few years and built my net worth from literally 0 to 7 figures from both saving and also stock investing. So without further ado, let's jump right in. So let's take a look at Apple's DCF valuation model first. So I will not do a full walkthrough in terms of the calculation. If you want to know that, and feel free to click on this video for NVDA where I did the full walkthrough. And here I will just talk you through my model input and what that impacts the implied share price. So first thing first, let's take a look at the revenue. And for the revenue growth, in 2024, Apple is mostly looking at a flatlining revenue growth, and that's primarily because it's decline in China's sales. So from this article that you can see in China's sales, it declined 24% from the first 6 weeks of the year. And how does that translate into revenue, which is if you look at China's revenue compared to its total revenue, and China is about 20% of Apple's overall sales. So a 24% decline over a 20% share, that's roughly 5% of the overall impact for Apple's revenue. So this year, even for Apple to maintain a 1.3% growth, and which will mean Apple will have to grow much higher in the other area to compensate for that 5% decline in Chinese market. So that's a basic assumption for 2024. And moving beyond 2024, from 2025 and on, I'm using an 11% assumption, which is aligned with Yahoo Finance's analyst agreement. And again, there might be different assumptions out there, but 11%, I think that's fairly reasonable for the next couple of years, given other areas of Apple will continue to grow for its services and for its Vision Pro and all the other new products Apple potentially can push out. And 11%, I think that's a reasonable assumption. And coming back here, and in terms of its gross margin, I'm using a 45%, which is in line with the past few years and slightly higher, but 45%, I think that's where I feel comfortable with Apple. And in terms of its operating income and 30% margin, which is slightly higher than last year, but roughly running up to 30%. I'm using the same number for the remainder projection of the years. And tax rate, again, using the same 15% and the same ones from the past few years. And moving on to the depreciation and amortization, I'm using a 4%, which is slightly higher than last year. And CapEx is roughly 3% of its revenue, again, slightly higher than the previous year, just to be on the conservative side. And with all these modeling inputs, and the last input I had is its WACC. And Apple have a relatively lower WACC, 9.6%. That's primarily because the beta is relatively low. And 9.6%, I think, is still on the conservative side, but I feel comfortable with the number. So with all these modeling input, the implied intrinsic value of Apple is $117. And compared to its current share price, $171, and you can see there is a fair amount of gap there. And for Apple to be able to get $171 intrinsic value, which brings me to the high case of Apple, where I actually have to be looking at 10% growth for next year and 20% for the next 4 years and 10% for the remainder of the year. So I think Apple right now is still trading at a relatively high price, but people are very optimistic about Apple's future, which is why even when the China news came out, Apple share slightly dropped for a little bit and then coming right back up. So that's where Apple is. And on the low end, I would say if Apple's revenue continue to grow at 5% and $75 is what we're looking at in terms of its valuation. So that's going to be on the very low end. So DCF is only one way of evaluating a stock value, and there are other valuation methods like the multiples and also Graham's valuation model. So we're going to be going through them. So when it comes to multiples, here we're using price and earning multiples, which is basically their price divided by their earnings. Very easy to understand. Apple is about 26. And other big tech companies, Apple is actually right now seen as the lowest, and even Google is slightly higher, and Microsoft is higher, and NVDA, Amazon is on the higher end. So if you take the average of all the big tech and take the 46 average PE and apply that, and that will almost bring Apple's share price to $300, which is very, very high. And I think given Apple's current situation and also its current market cap, it will be very, very hard for Apple to grow at much faster rate. So I think this is overly optimistic. And let's take a look at the Graham's valuation model. So here I will actually ignore the original Graham's valuation formula because this is very optimistic, and I'll use a revised formula. The key assumption here is the growth rate, taking a 11% growth rate, and this is Apple's EPS, and that will bring us to is 178 intrinsic value. And right now, Apple is trading actually roughly around that range. So I think to some degree, Apple's share price is fairly around the range that we're looking at. So now we understood Apple's valuation, and seemingly that if Apple ever goes closer to $117, which is its current implied share price, and that will be a great place for us to buy. So now let's take a look at the technical charts to understand how far we are from that intrinsic value price. So now I have my Thinkorswim pulled up, and if you look at Apple's chart, this is its weekly chart. It's relatively easy to understand. The top line, which is the all-time high, is around $200. And right now, we're trading around Apple's one of the strongest support in the recent trading prices, which is 165. If Apple breaks below 165, and the next key level is 124. So our implied share price is 117. So that will be around this range. So I would say if I see Apple gets closer to this range, and that will be the places where I will be interested in. If Apple ever break below 124, the next key support level is 103. And if it break below this point, the next key support, which is 54, which I don't think Apple is going to get there because this is back in 2020 when Apple's revenue back in 2020 was roughly $274 billion, and that's $100 billion less than its current annual revenue. So I don't think it will get there, but we'll see. So the conclusion here is I will closely watch Apple break below the 165, and especially once it's broken down the 200-day moving average, and it will be in a bearish trend, and I'll look for the 124 level for a possible entry for me. And again, this is not investment advice, and this is just my own opinion. So if Apple will ever get close to that $124, and someone will be happy, and that is Warren Buffett. And Warren Buffett has been holding anywhere between 40 to 50% of his entire portfolio in Apple stock. And here is what he has to say about Apple.
We own 5.5% or a little over percent of Apple. It's probably the best business I know in the world. And we own 5.5% of it. And that is a bigger commitment that we have in anything except insurance and the railroad. So it's our third largest business.
And here's another interesting clip.
Exact price, but a whole lot higher. I'd rather have it go down. For one thing, if it goes down, Apple's going to buy a lot of stock back. They're already buying stock back. And if it goes down 10%, it means they get to buy 10% more shares, and my interest will go up 10% more for spending that money and buying shares. So I am benefited by going down. If I were to talk my book, I would talk it down.
So yeah, very interesting point of view, and I totally agree. So I think if Apple's share price will get even lower, there's a lot of buyers sitting in there, like Warren Buffett and myself included. And here's another interesting clip.
I like to see the new release do well, or that, but I do not focus on the sales in the next quarter or the next year. I focus on the hundreds and hundreds and hundreds of millions of people who practically live their lives by it. And if you look at that little piece of whatever it is, that is some of the most valuable real estate in the world.
That's another interesting point, that the demand apparently fluctuates quite a bit for Apple, and the same applies to other consumer-related companies. Like Tesla's demand also fluctuates quite a bit. So as a value investor, and you want to be focusing on the long term and not only just about the quarter-over-quarter or even the year-over-year revenue fluctuation, because one of the key things you want to ask yourself is if there's anything that's changed fundamentally. If Apple's stock price hasn't been changing anything fundamentally, and what are the growth opportunities that Apple is looking at? So I think one of the growth area very obviously is service revenue. And if you don't know that, Apple's service business is about 70% gross margin, whereas their hardware business is about 35% gross margin. So if Apple can grow further in its service business, that can drive its overall top line and also bottom line growth. And given the recent news that Apple is going to be partnering up with Google AI and bringing that capability into Apple service, and I think that will bring up a future growth opportunity for Apple. So overall, I'm very positive about Apple's future given its brand value and how addicted people to Apple's product, like what Warren Buffett just said, and also not so focused on its short-term fluctuation. And if the price ever dips down, I just think that's a great opportunity for all the value investors out there. And I will be closely watching Apple to its key levels and when it regresses back to the implied share price. And I think that will be a very, very interesting point. So besides Apple, there's another tech stock has been hugely underperforming the market and all its other peers, which is Tesla. So I made a separate video on Tesla. If you want to hear my thoughts about DCF valuation, technical analysis, and also stock fundamental analysis, make sure you click on this video and I will answer all your questions regarding to the Tesla stock. And before you go, make sure you subscribe and like this video. I hope to see you next time. Bye.